can tell
Oh
you
boy.
that as somebody who I get phone calls from people about rates for 30 years now. When the Fed does this, my phones start ringing like crazy because everybody thinks that rates have gone down where they don't realize they've already gone down.
Hey there, everyone. Jamie with Sell for 1%.
Who?
As usual, exciting day. Jerome Powell leaves the cave. Rich, what do you say? What
Well,
What is he going to
it's
say?
10:35 a.m. as
Oh,
we
2 o'clock.
record as we record this is 10:35 a.m. and the announcement I believe is at 2 p.m. So we are less than 4 hours away from either white smoke or black smoke
There you
puffing up
go.
off of the roof of the Federal Reserve billion-dollar building. We shall see what happens. The sentiment right now is the Fed is still worried about inflation, which still is out there. It's everybody has to acknowledge there's some degree of inflation that's out there somewhere that has to be considered in this whole equation. Consequently, they probably will just lower a quarter, not a half. So a half a point would kind of be a little bit of a surprise in a good way, and a zero, no raising would be a surprise in a bad way, obviously. But as we always say, it's not so much what they do, it's what they say afterwards. So everybody, if you were watching it, you want to stay tuned after they say that whatever they did and listen to what Jerome Powell says in his news conference. That's going to be very important to the whole thing. But in response to this, what with the street level, what we need to say is that interest rates are already down. They are baked in. I have buyers with perfect scenarios right now that I'm quoting this morning, 5.99% 30-year
Ooh,
fix. You know, it could be
that's
a
big
little
news.
higher depending on your situation. They have ideal credit, large down payment. So 20% down, you're not going to get 5.99. 10% down, you're not going to get that. But they have a significant down payment and great credit. Nonetheless, that same rate would probably have been 6.5 3 weeks ago. So
Right.
we have come down already. There's more room to go up right now than there is down in mortgage rates, I believe, for the short term. And the long term, I think we are going to see a steady five in front of everything by next year if everything works out the way we hope. But again, no one really knows this. And if you are trying to refi and you're saving $300 a month right now, don't wait to save $220 a month and lose the whole thing, because that's what happened last year. I had people that I said, "Hey, you can save $250 a month." And they said, "Well, they just lowered. They're going to, I'm going to wait and see what happens." And lo and behold, they went back up again and they lost all that ability to do any kind of a savings on their mortgage. And they've now been a whole year of paying a higher mortgage balance or mortgage payment than they need to pay. So take your gains when you can take them, and if the future holds further ones, you can take gains again. That's if you're refinancing. If you're buying, it's a great time to buy because rates are at pretty much I would say a 36-month low right now.
One of the keys, I think, what Rich is saying is that like people don't know this. I have sellers that are saying, "Well, hey, should we drop our price this week and line up with the Fed rate cuts?" And it's like, well, the rates are already down, but the other people who don't know that are the buyers. And so as the Fed does this move, even if mortgage rates were to, like you're saying, Rich, have more room to go up, they might tick up slightly. I think you'll see more buyer demand pick up just because of the headlines that, Fed cuts rates.
I can tell
Oh
you
boy.
that as somebody who I get phone calls from people about rates for 30 years now. When the Fed does this, my phones start ringing like crazy because everybody thinks that rates have gone down where they don't realize they've already gone down. But
Yeah, that we are paying attention and making the
yeah,
best of it.
right. Now, what you don't want is what happened last September, where everybody saw the rate cut of a half point, thought rates were down, and they called you and you said, well, actually, rates are up.
Right,
So that's what you
exactly.
don't want to
Yeah,
happen.
yeah.
Yeah. I like looking at it's called DXY, the dollar index, and you can just see the relative strength of the dollar. And that will kind of tell a tale of its own.
Yeah.
It's down 25% since inauguration. They printed a bunch of money, but at the other end of it, it is interest rates. I do think it's a robust, strong economy. I do trust things are going to pick up here. I do have this hopeless optimism that I hope some of you share.
Nope, not at all. That's why rates are going to keep coming down because the economy is not that robust. Economy is robust. The market's exaggerated, but housing always does well in a recession. And part of that's because rates will come down. We always outpace recessions. So I saw something, it was a national headline that the listings were down 7%, and that's across the board. And in Columbus, it's not the case. We're still climbing upwards. But I thought that was interesting. They were saying, oh, the buyer market may not get here because listings are down 7%. You know, it's interesting how everything kind of plays together.
Have seen for a long, long time. And Rich, you've been doing this a long time as well, Jay as well. Jamie, not so much. Still learning.
Jamie's been doing it for a while now.
This is
too.
my first day out here.
Anybody that's juggling 2 calendars has not been doing it that long. So
Don't give my trade secrets.
we see is these major price bracketing. And so, you know, $100,000 a major price bracket, 200,000, 300, 400, and then, you know, in between 150, 250, 350 are major price brackets. And so when we price homes, we try to look at that to get the most buyers we can to see your home. We also see the same thing with price bracketing on mortgage rates. And I believe that 6% is a major price bracket. It's kind of the center point of the teeter-totter. We'll see rates drop below 5%. A bunch of buyers rush in because it dropped below 6%. It'll nudge back up to 6 1/8 or something like that, and your phone will stop ringing because it's above 6% now. And
Yeah.
I think what you guys are kind of talking about is that, you know, 599, I mean, that's a great scenario. We'll see what Uncle Jerry does here at 2 o'clock, either quarter point, half point. But as you said, Rich, it's more about what they're talking about for the October meeting. And will they be looking at lowering rates again? And if they do, then with any luck, we'll see rates come down a little more and be predominantly in the 5% range, which I think will make everyone's phone ring.
One of the economists, he actually was a former Fed governor, and he was saying that there's an even Steven area where the Fed funds rate wants to be. I think it's like 3 3/4. That would be like if you get below 3 3/4 on the Fed fund rate, you're really into territory that is lower than they want to be. They want to be right around that area. And right now they're at like 4.5. That means they really only have about 3/4 of a point to lower. They don't really have that far to go just to get to even. And then if they're going to go below even, that whatever that even rate is, they're going to have an event, a black swan type event, where a COVID, a 2008 mortgage crisis,
No more,
something like
please.
that.
No more, please.
Yeah. So there's not that much room to go down from here. And we've talked about quantitative easing as well. Mortgage rates, I think, are going to trickle into the fives. People that are waiting for threes and fours might be waiting a long time.
Yeah. Yeah, I think you're right
My
there.
reaction button.
But I think if we see again get down into the fives, that we'll see a little bump in the marketplace. Jamie,
Yeah, I
as far
think
as
so.
your
Yeah,
buyers,
100%.
Jamie, buyers, what are you seeing with your buyers? Are they kind of waiting? I've got a listing right now. The buyer is unrepresented. They're doing everything themselves. And you know, you got a phone call the other day and she's in for a rate. We're still about 3 weeks away from closing and she's renegotiating the rate with the lender. What are you seeing with your buyers? Are they waiting for that 5% number or?
Well, that's a weird scenario you just gave me. That's not the typical buyer for sure. If you were to buy today and go into contract to buy some today, you're doing your inspections, you're 30 days out, and say at 3 o'clock today, your rate drops, you know, half a point, whatever, you know, I know it's not the same related, but like as time goes on, the rate comes down, you can relock before closing. But that's the conversation you have with your lender.
I see
Yeah.
you're driving me crazy right now.
Yeah.
So,
That's a
like,
conversation not
know,
for me.
when you're locked, let me say to everybody out there, you want to lock, you are locked. That means that you can't go up. That also means going down is not as easy as like just snap your fingers. Now we do offer a one-time float down on most loan scenarios. It's a 495 fee, and you can float down to a lower rate one time within 30 days of closing.
Hmm.
But this whole thing of like, the rates went down today,
Renegotiating with you.
lowered again, lowered again. Old Rich has been doing this 30 years, and I'm going to give you a ticket to Zanesville.
Well, no, Jay has a buyer right now with you, doesn't he? And I can't wait for that conversation. Jay, I need that buyer's contact info. I need to make sure he hits Rich up to renegotiate that rate here
Well, we
ASAP.
talked about it's already priced in. They're already getting this rate
Yeah,
raise.
Right,
So,
right.
they're
and that's
actually the 599 people, actually, now that you mention it.
yeah, I knew who you're talking about when you were saying it because I mean my buyers, of course, are much better than
Stellar.
Jamie's buyers. Yes,
The gold
that's
standard.
I was giving you balloons and you popped on mine. Okay.
excuse me. And it sounds like, Dad, you need to tell that buyer who's unrepresented, you may want to call Equitable and see what they can do for you because it's like that would be that's the nuclear option that will drive Rich crazy too. Is someone's like, well, I can't renegotiate, I'll just go somewhere else and relock. And that's
Well,
not,
that's what she did.
yeah, threaten that. But
Yeah,
Well,
she moved banks.
you know
Where's
what?
where's
If
the
somebody
hush
does that,
emoji?
I just say,
Good
I
luck to
wish
you.
you all the best of luck and
Yep.
in the future. And
right.
hey, not like I've never changed contractors before. I mean, if you got to do it, you got to do it. But we would do everything we can to accommodate someone who was being
Sure.
reasonable. Let's put it
And
that way.
you do offer the float down, like you
We
said.
offer the
So,
one-time float
right.
down.
So, Jada Bomb, what are you seeing on the seller side?
It remains just a very weird market. Some of these I put on and they go in 1 day, 4 days, 7 days. Other ones, not so much. What I'm seeing in general, what I'm trying to advise people, and it varies zip code to zip code. The new numbers came out today. The median days on market remains the same, about 42 is what I'm seeing in the metro area. And it's interesting, like I ran these in Worthington, and the median for the metro area and Worthington, it was 42. I ran these in Lancaster yesterday for somebody working on pricing there. The median for Lancaster and the Columbus Metro, both 42. I ran it down in London, same thing. It was 40 and 42 for median days on market. So I think what I'm seeing and what I'm trying to prep my sellers for is, the expectations are it's going to take a couple weeks. And if you are come on, you're priced aggressively, or there's something great about your listing, yeah, it very well can pop, but it's the perfect situation. But you need to go into it and not freak out if you're not sold in the first, 2, 3 days or the first week. Let's have a little bit of strategy as we do this. And in Columbus, every month we're selling about 3,500 homes. And so you were at like a month's supply. And right now we have today 3,560 homes in contract. The buyer demand is the same as it was beginning of the year, same as it was last year. I mean, we're selling the same number of homes, give or take a percentage. Today we have 5,500 active listings. And so you have more homes for sale now than any time since 2016. The buyer demand's the same, but it's spread out across more homes for sale.
Right.
You got to have a little more strategy, a little more patience, a little more know-how. It's not 2008, it's not 2009 where people are hemorrhaging price and losing a bunch of money, but it's also not 2020, 2021 where any realtor can go put a sign in the yard and it's sold in 2 hours. So it's still a seller's market. Prices are at all-time highs, but it is not a market where the expectation should be all the neighbors' homes sell in 3 days, 4 days. I mean, that's typically not what we're seeing unless you're just in a real sweet spot price wise and in a great location. I looked at one in Hilliard yesterday with a guy, and this house, the median days on market in Hilliard was about the same. It was a little bit quicker. It was like in the 30s. I want to say 35-day median in Hilliard. And I pulled a CMA on his neighborhood, his subdivision specifically, and the home's there 6 days, 7 days, 5 days, and I looked at it and said, "Man, these are humming." But we're $400,000 homes in Hilliard, Ohio. You're in that middle America sweet spot where people can afford this. You're in a great school system, great location, Central Hilliard. So there are outliers, but that median for the market, it's about 40 days right now to get a house sold.
And that's powerful information you've given out for free here in this Zoom call. I don't want to speak ill of any other agents. Some people don't understand that, and I took notes here listening to you. Free advice, free game. Game is game. We can give you the game. You can try to reinvent the wheel, or you can call us.
Subscribe, leave comments, ask questions. This is all we do is push out real estate, buy side, sell side. And we got you. If you want to complain, call Dave. He'll take all the complaints about me. You need
There
a
you go.
mortgage, give Rich a call.
All right, guys. Well, thanks for a good conversation. We're looking forward to 2 o'clock and Uncle Jerry making his announcement. And if there's anything crazy going on, we might possibly be able to get back together for an emergency meeting and give you an update for this week. And the gang here at Sell for 1% and Rich Saccone over at Equitable Mortgage. We appreciate your time. If you like what you're hearing, please like and subscribe. We would love to hear from you if you have any questions whatsoever. Have yourselves a great day, everyone.